Welcome to The Explainer. Today, we're diving deep into the incredible story of Western Digital's recent transformation. We're talking about a company that has completely flipped the script on itself, and it's led to a massive, massive surge in its stock price. Just look at that number. The company's stock has shot up over 260% year-to-date as of late 2025. A rise that dramatic has pretty much everyone asking one big question. So, is this for real? Is this thing built to last, or is Western Digital just riding a temporary wave that's eventually going to crash? Okay, let's get right to it. The bottom line is, yes, this is a real, fundamental business transformation. The numbers don't lie. But, and you knew there was a but coming, in changing itself so completely, the company has created a brand new, high-stakes game with a very different set of risks. So to really get what's going on, you've got to see just how radically this company has changed. This wasn't some slow, gradual evolution. Nope. This was a fast, deliberate, and dramatic reinvention. I mean, this happened fast. Before 2025, they were this sprawling giant with its fingers in a lot of different pies. Consumer flash drives, enterprise hard drives, the works. Then boom, February 2025, they finalized the split. And what comes out the other side is a new, much leaner Western Digital, totally locked in on one specific corner of the market. So how'd they pull this off? Well, the entire transformation hinged on one huge move. The decision to literally split the company. And that one choice redefined their entire business model and really their reason for being. And this slide just lays it out perfectly. The old Western Digital was trying to be everything to everyone in storage. You had the consumer-facing flash business, SanDisk, and at the same time, the huge enterprise hard drive business. The new Western Digital? It's a pure play specialist, zeroed in, laser-focused on one thing, high-capacity hard drives for the massive cloud data centers. So what happened when they made this massive change? Well, by pointing all of its firepower directly at the data center, Western Digital basically plugged itself into the most powerful growth engine in all of tech today. First off, the revenue absolutely exploded. Sales for fiscal year 2025 rocketed to over $9.5 billion. That's a staggering 51% jump from the year before. I mean, that's a crystal clear sign that their new focus was paying off, and paying off big time. Now, here's where it gets really interesting. Look at where that money's coming from. In the last quarter of fiscal 2025, after the split was done, a jaw-dropping 90% of their revenue came from the cloud segment. The old client and consumer businesses, they're barely even a blip on the radar now. You see, this isn't just about storing your family photos anymore. The company is now a critical part of what's called the AI data cycle. As AI models create and just gobble up unbelievable amounts of data, the big cloud providers, we're talking AWS, Azure, Google Cloud, they have this bottomless appetite for the exact high-capacity drives that WDC now specializes in. Okay, so with this new gusher of cash coming in, management got to work, and fast. They moved quickly to shore up the company's financial health. They weren't just counting the money, they were building a stronger, more resilient company for the future. First thing they did, they aggressively attacked their debt. We're talking paying down a massive $2.6 billion in the fourth quarter of 2025 alone, a huge move to clean up the balance sheet and cut down their financial risk. And next, they sent a huge signal of confidence to the market. They bought back $1.17 billion of their own stock in the first half of fiscal 2026. That's basically management telling investors, we think our stock is a great deal, and we believe this cash flow is here to stay. So you can see the playbook here, right? It's a clear, disciplined strategy. Step 1, build a stronger foundation by fixing the balance sheet. Step 2, start rewarding the investors who stuck around through all the changes. It's a classic 1-2 punch of smart financial management. But here's the catch. This new laser-focused strategy has a pretty major downside. It concentrates their risk in a huge way. By betting everything on a single market, Western Digital is now basically walking a high-wire act. And this number says it all. A whopping 76% of the company's revenue in the last quarter came from just its top 10 customers. And it gets even more concentrated than that, with just 3 customers making up 15%, 14%, and another 14% of sales respectively. That's what you call customer concentration. And on top of that, you've got this whole host of other risks. Their biggest customers are famous for binge and purge spending. They'll build out data centers like crazy for a year and then just suddenly hit the brakes. Then you have to worry about geopolitics, trade tariffs, and the massive challenge of shifting to the next big technology, like these hammer or heat-assisted magnetic recording drives. Yeah, the whole global political game, especially U.S. tariff policy, just adds another layer of total unpredictability. And this quote from TechRex really nails it. Tariffs have forced tech companies to completely rethink their supply chains. For a hardware company like Western Digital, that's a constant and very expensive headache. So where does that leave us? What's the final verdict on Western Digital's big bet? Well, you have a company that pulled off a brilliant turnaround, no doubt. But in doing so, they've taken on a new, and you could argue much greater, set of risks. It really boils down to this, a tale of two potential futures. The upside is undeniable. They are a lean, mean, pure-play machine for the AI revolution. The demand for what they make is off the charts. But the downside is just as real. Their fate is now completely tied to the whims and spending habits of a tiny handful of giant tech companies. By ditching its old business, Western Digital has gone all in, betting the entire farm on providing the storage for the AI cloud. And that leaves us with one last massive question. Is this intense focus a masterstroke that's going to fuel years of incredible growth? Or have they just created a single critical point of failure? Only time is going to tell.